Welcome to ECNTRADE daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. With liquidity being rather light due to the Monday's holiday in observance for the Queen's birthday, the Australian dollar bullish trek continues and now reaches the highs last witnessed back in July 2019. If we look at the shorter term picture, the market has presently rejected that region, and therefore you can see from the technical point that we are extremely overbought from the dailies, as we are still trekking towards that top side of the range. But from the rejection, as you can see here on the hourlies, does put some kind of projection back to the downside. If we get a break of 69.50, which I feel is the trigger level, should ignite the move further to the downside and therefore look towards the region of the lower 68. But as I mentioned, it is clearly from this 4-hour chart that gives us that break of 69.50, and if so, would see further downturn and expect the move towards that 68 region. Resistance at this stage is seen from 70.35 to 70.65. The market was very volatile on Friday with the anticipated US non-farm payrolls number. The US Bureau of Labor Statistics announced that the employment increased by 2.5 million in May, blowing past forecasts out of the water after the estimate was around 8.3 million. While the unemployment rate also missed the 19% forecast, the decline came in around World War II highs at 14.7 down to April 13.3. From the reading, it has given some indication that the coronavirus is actually slowing in terms of opening leisure and hospitality. From a technical point, we can see that we've currently seen the US dollar attempting to recover as the market backs away from the 113 region. Still holding to a relatively neutral view, I would like to see a little bit more evidence when it comes to the supports. A break of 112.60 would give further down test to 112 figure and reassess from there, because a break of 112 would open the way back towards 111. On Friday, we did get a rejection from the highs of 109, but I still would like a little bit more confirmation to the downside, and a move through 107.90 would ignite the fall towards the level of 107.05.15 and lower, maybe to 106.30.40, with the resistance seen at this stage at 108.60. I still hold a neutral view for the pound since the break of the level of 126.5 area, and therefore, due to that, then I'd rather sit out and wait for better opportunity, as the market is still relatively whipsawed due to the comments made with the Brexit and also the current easing, that is, of lockdown restrictions. So let's see what the market entails from the challenge of 127.55. If rejection from there, could see a move back to 126.75 and lower. Dollar CAD is extremely low after reaching the objective of 134. I do feel there is a reversal coming very, very soon. Although I hold a neutral view, I would like to see, in terms of this market, getting out of the oversold level, and therefore could see a retracement back to 134.5 to about 134.90. The gold outlook, well, the market took a stab at that level once previously challenged back here in April of 1,670, crushing the level of 1,600, around 86 to 88, that is. It is assessed that the risk is still holding to the downside, and therefore could see a re-challenge of these lows. Still, from a technical point, the market hasn't really reversed from this bearish sentiment, even though we did see a rebound, but it's only a rebound from previously witnessed from this level of 70. I still believe that the market could drop down towards the 55.65 region, with any advances above 1,700 to fail. Oil reaches its target of $41 a barrel near enough and fills this gap in. from the highs of this Monday of 40.5 does give us a slight turn in the pattern, and therefore I do believe that we are looking for a possible move back to 38.20 to 37 to $36 a barrel. If we do see a break of $41, then this could give further indication up towards the region of 43 to maybe 45. So do keep an eye on that if you are trading from the longer side, but wait for the break, because I do feel that we are a little bit somewhat overbought, and a rejection currently seen could see a little bit of weakness into this week. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report and hope you enjoy the great start to this week.